Hey, good morning, everybody. Welcome to the Ankerstar Wealth a morning update. We're back after the big conference that we went to here in Austin. Mike came out to visit. We got to sit around and talk to some industry professionals in the crypto and digital asset space. So we'll talk about that today first, from what we learned from the conference, and then we're going to talk about this morning's ADP number that got released and what Mike thinks about that. And we're going to talk about diamonds, which we don't talk about diamonds a whole lot, but there's a whole crew of people out there that invest in diamonds and how it relates to what's going on with inflation, and then how that relates to what could happen with interest rates. So Mike's going to talk to us about all of that. Before we get started, this is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. The opinions expressed are Mike and mine's alone. All right. A whole 2 days of crypto. Well, it's really digital assets. And I kind of start off with, if, depending on your education level on this particular stuff, you can think, well, this is all new. And I will say the example that they use right up front is everybody's had a digital asset. Not everybody, but, a lot of folks have had a digital asset before. And they use the example of like airline miles, right? You accrue them. They're digital, right? Because they only exist when you log in. I'm a Southwest guy, so you log in, but I've flown all of the airlines basically, and I have some points that go with that, sort of thing. Those are assets, and they do have value, right? And you can, sometimes send them to other people. There's not a whole lot of trading going on, but you can buy more. So that's really, when you think of digital assets, that's like just one example. Now you start talking into this whole crypto thing, which has kind of exploded in popularity. And it's really all over the map. So what Mike and I go to this conference, of course, because we're looking for, really our only exposure to this is Bitcoin, and kind of, what's the latest and greatest on Bitcoin, that sort of thing. But really, there's a whole world of this stuff out there. And some of it, you're right, is complete crap. It's, gambling and meme coins and all that stuff. But the rest of them really serve a purpose. That's one thing I took away from it is, it's just like each coin is actually, it's kind of unfortunate they use the term coin and token, because people think that that's like real, right? Like something I can put in my hand. It's not. It should be called something else. But each coin out there, if you will, serves a purpose, right? It's a piece of software, and it's performing a function, largely related to the blockchain or a blockchain underneath that coin. So a lot to learn. If it's too much to really peel back into any show, that it doesn't go on for at least an hour, right? But I wanted to show you this website. So it's DACFP. It's really an education, um, you know, platform, not only for advisors like myself, but for retail investors as well, if you want to learn more. It's run by Rick Edelman. If you've heard that name, he was famous for being the leading advisor in the United States with Edelman Financial Engines. He has since, sold that and retired, if you will, from that particular function. Now he's gone into education. Obviously, he's a big believer. He has a lot of exposure to this stuff, but he puts all this together, and he has a podcast. If you're interested, the truth about your future is here. So, that would be one way to listen in. But if you go to their landing page, you can go down here. Why blockchain? What is Bitcoin? They do tout a 1% allocation to Bitcoin for everybody. So Fidelity has also come out and said 1 to 3 would be appropriate. We also learned while we were up there, I didn't see this in mainstream news, but until he brought it up, and then I saw it. But the state of Wisconsin has put $150 million of Bitcoin into their pension fund. So it really, and we talked to, Mike and I were at dinner at Vince Young Steakhouse. We sat next to a couple folks that are in institutional side from Virginia, the police fund, if I remember correctly. And yeah, they've had exposure to Bitcoin for, I want to say, since 2018. So that's 16, that's 6 years. So which is really groundbreaking for now. It seems like everybody just is moving now. So a lot to peel back there. There's a lot of, personal comfort level. If you're with us, that we have it in our models at a certain risk level and above, and we don't have it below that, right? But this one of those things, it's just like, I would say, first of all, trust us. We've we've done our due diligence on it, and we've chosen to believe in Bitcoin and Bitcoin only. There's some other small exposures you might see, but for the most part, Bitcoin only. And then our allocation is above 1% where we choose to allocate to it. So you should know it's in your portfolio at all times, but you should also trust our expertise. And so far, so good. There's also, if you want to look at the ETF toolkit, we've already done the due diligence on it, and we chose BitB, which is BITB from Bitwise. They are experts in the space. I like how they hold their, the Bitcoins, are in cold wallets, so they're not tied to the internet. So there's just a lot of things that they're doing right. Plus, they're fairly cheap. They're at a 20 basis points, which is pretty good. I won't go into the rest of this, but certainly if you go to this website and you want to surf around, you can see all kinds of stuff that relates to this space, and it's written pretty well, meaning 8th grade reading level, right? Of stuff that if you don't know anything, you can hop in and actually learn versus it getting too technical too fast. So that's all I have, Mike. I will turn it over to you. You can continue to talk about the conference if you want, or you can head right on into your topics.
Oh, yes. The conference was fantastic, and learning about the software purposes of blockchain and kind of that background. And, because coming in, I was very familiar with the Bitcoin thesis, but the rest of it, I was like, I don't even know what all this stuff is. But we learned a lot, talked to some people, and there still is things out there you should absolutely not be a part of. But there's more good things that I'm aware of now. That being said, today, hey, we're off to a green start. But why are we off to a green start? And it's always the bad news is good news kind of thing, which when it comes to lowering interest rates. So as many people know, the discount rate is relatively high. Investors are like, we can't wait to get cheaper money so companies can take those loans and invest them and do good things with their company. That's why it really affects more the mid to small cap and smaller companies, not the Apples and Amazons. So markets are up. Why? Because the bad news is the jobs number came out, 152,000 new jobs created in May. And just so you know, there's a Wednesday jobs number from ADP that comes out. It's kind of like a preliminary, and then Friday is the official one. But anyways, it was lower than expected. So it was below the estimate of 175,000. So as a person that wants a job, as a person that wants their kids to have jobs, like to me, that sounds like bad news. Like, hey, there's less jobs created. But and I think that is, well, that means our economy is slowing. At least there's new jobs being created. At least it's not layoffs. But but when it comes to the investing side and getting that interest rate to come down, this is the kind of news the Fed looks at to say, okay, we're getting closer to lowering these rates. We're going to have a lot more validation than this. But, the bad news is good news. So that's one way of looking at things. So another thing I saw, and I know, we have lots of people out here that are listening that are married, but in case you're not, in case you're one of our new employees that are single, and you're thinking, when is that time to buy that diamond ring, right? Guess what? Prices are down on diamonds. That's where the bad news is good news, really. The really bad, So article came out, said the diamond industry is in trouble for multiple reasons. Supply and demand. Supply, there's a lot more lab-grown gemstones coming on the market. Demand, less people are buying diamonds, or they're waiting to buy diamonds. I'm not sure I don't know anyone that's investing in diamonds, but certainly if you're looking to get married, it just got 5.7% cheaper to buy that ring. I'm just saying, diamond price is down 5.7% this year and down 30% from 2022, which is when that inflation kind of really peaked. So if you got engaged in 2022, well, I'm sure it's worth it. So a couple other validation points. And I was just looking at like a 1 carat diamond. I mean, there's different levels of diamonds, and I don't know how many people are buying 3 carat diamonds, but a 1 carat diamond year to date, and this is looking really last year, down 21% last year, year over year, 25%. I mean, these are just confirmation that inflation's coming down. this is certainly not a recommendation that Ankerstar Wealth is going to be investing in diamonds. Here was another one, and I thought this graph was really good in that you can see the gross margin markup from cost of goods sold versus retail price. So you can see there's a 35% uptick. Obviously, they just follow each other along. But even then, you can see in 2023, you can see prices starting to go down. So, we're looking for confirmation on inflation, receding. We don't want inflation to go up. I know you see things online. I see them on Facebook. The price of beer is up 50%. Blah, all these random things. But at least we're starting to see it recede now. So with that, maybe it's time to go out and buy that diamond. Or if you're a procrastinator, you might be like, I think we're going to wait to get engaged because I can get it a better deal a year from now. I hope that's true. So anyways, don't wait just for that reason.
Yeah, I was going to say, I'm not sure you'd want to openly communicate that to your soon-to-be spouse. That was the reason that you moved forward. But I will say, hey, I am a diamond investor. I've invested exactly in one diamond, and that whole experience is the best investment I ever made. So bringing Irene on board and joining forces with her. So with that, hopefully you enjoyed today's show. We will be back with you tomorrow morning with our next topics. So with that, you guys have a good one. Bye.